Peter, very good to see you. Today we get to dive into a really important topic. Should retirees include Bitcoin in their retirement portfolio? So Fidelity recently published this white paper, I know you've seen it, called The Case for Bitcoin. And I want to talk through this paper considering right now Bitcoin is trading about 67,000 compared to its recent high of 70,000, of course. So let's start though with the cryptocurrency recently halved. That's why it was in the headlines. Can you explain what that means and how that halving changed its value?
So the halving is kind of a predetermined algorithm to continue the scarcity and limit the supply of Bitcoin or new Bitcoin entering the market. And every so often, it's about every 4 years, the amount of Bitcoin that is generated when a computer completes one of the Bitcoin calculations and processes, they are awarded a certain amount for kind of completing an equation on a timeline, and then they get to be the one to enter the next bit of the ledger. Bitcoin is basically a receipt that is kept on multiple computers worldwide, and then new transactions get added to this long ledger that is in place permanently. And the amount of Bitcoin awarded to a computer for doing that is cut in half. And so that has happened in previous iterations. There is nothing that is necessarily guaranteed, however, that just because we are coming up on or in this case just recently passed a scheduled halving, that the price is going to move of existing Bitcoin in a set or corresponding way. The new Bitcoin being generated, yes, that is preset. Now it will be half of what it was before, but the existing Bitcoins already existing supply does not necessarily say that the price of an existing Bitcoin is going to move in tandem or a specific way just because of the having been occurred.
Yeah. So there are some people, though, who do believe that the halving could push its value higher. So I want to circle back to Fidelity's white paper now. And according to Fidelity, a 2% allocation to Bitcoin could allow for an increase in annual spending ranging from 1 to 4% and potential losses of up to -1% in a worst case scenario. And a 5% Bitcoin allocation could allow for an increase in annual spending by as much as 9.5% for older investors, but with much steeper potential losses of up to 3% in worst case scenarios. So, Peter, do you think a retiree or pre-retiree should incorporate Bitcoin into their retirement portfolio?
Well, there are pieces of this report that I agree with, and then certain elements of it that I highly question. Number one is that they've got a larger allocation for older investors. I think that probably is backwards. I think that perhaps older investors would want to minimize the exposure they have to very volatile kind of investments. And let's not mince words here. Bitcoin and crypto, period, I believe is going to continue to be volatile. That said, it does have the capability to not be so correlated with the movement of the rest of the market necessarily, even though the two have both gone up here recently. That's not always certain to be guaranteed. And it's probably uncorrelated with the value of the dollar itself, meaning that the two theoretically would move in opposite directions. As the dollar sort of loses value to inflation, the potential value of Bitcoin could increase into the future. I think that is important. But as far as like the ratios there, what they're saying is that if you put 2% of your money into Bitcoin, you could potentially subject yourself to a 1% total loss. Well, yeah, that's if Bitcoin loses half of its value. That makes sense. And if you invested 5% of your total portfolio value, you could lose as much as 3% of your total portfolio value. So now it's a little bit more than a 50% loss potential in Bitcoin. I think those ratios make sense and might be about right. And I think that the percentage that they are sort of suggesting may be allocated to Bitcoin or cryptocurrencies probably is about correct in the 2 to 5% range if it is something that you are comfortable with. I think it's skewed and backwards, that the younger investor may have a higher risk tolerance and may want a higher allocation, therefore, where the older investors may not want as much volatility in the portfolio.
Mm-hmm. We, of course, see ETFs as being less risky, and Bitcoin recently gained more than 50% in April as money quickly flowed into those new spot ETFs. Can you quickly explain how investing in those spot ETFs is different from directly owning Bitcoin?
Well, I used to say, when it came to Bitcoin or cryptocurrency, that if something is intended to be off the radar, which sort of was the case for Bitcoin and cryptocurrency in its infancy, right? If something is designed to be off the radar, then don't be surprised when it disappears. And unfortunately, we've seen that happen with cryptocurrencies in whole. Some of these, celebrity sponsored pump and dump one-off coins that sort of went bankrupt, FTX and the whole debacle there. Bitcoin, however, I think has been legitimized. It is much more regulated and scrutinized now. It has been adopted into the securities world in the form of these ETFs. Now let's talk specifically about ETFs. There is nothing about an ETF inherently that says it's less risky. ETFs, exchange traded funds, tie to certain market sectors or types of investments. So the ETF is as risky, as conservative or aggressive and volatile as what it is tied to, the underlying investment type, right? So that could be the aggregate bond index or an ETF of US Treasuries, rather conservative. Or it could be tied to highly aggressive growth stocks or even to cryptocurrencies. And in which case, that ETF is going to be as risky and volatile as kind of the underlying assets that it is tied to. But the fact that Bitcoin has been tied to an ETF, I think, again, sort of legitimizes its permanency in the financial world as something that is likely going to stick around. As a result, it is subject to audits and regulation. So, I think that Bitcoin is much more of a legitimate kind of investment option and allocation than it probably once was, where people had to store their own Bitcoins on their hard drives and worry about the passwords or the apps that they're keeping it in, and the Bitcoin wallets and the staking. Well, as compared to now, where you can go into your investment portfolio and simply buy an ETF, a regulated ETF that is tied to the price and the movement of Bitcoin or a cryptocurrency, seems a much easier route to go about that for kind of the average investor who may or may not want a cryptocurrency or a Bitcoin piece of exposure for a number of reasons why. I think we'll go into a few of those.
So, how should investors evaluate the role of Bitcoin in terms of diversification, risk management, and long-term financial goals?
Right. And this is why or why not we might want to include it. I think that we look at Bitcoin and cryptocurrencies a little bit on two ends of the spectrum. One is like the home run, that this is something we're swinging for the fences on. And if we end up striking out, it's not money that we exposed that is going to impact or affect our life. So only money that you are comfortable losing on that highly aggressive end. It's kind of like, all the people who took up day trading when COVID first hit. Hopefully they didn't expose more than they were comfortable losing to that, but I think a lot of them did, and a lot did with Bitcoin as well. However, on the other end of the spectrum, I think is maybe the more appropriate place, and what the Fidelity article points to, which is that a small allocation to Bitcoin, in my mind, is almost like and could supplement or complement a allocation to gold in a portfolio, in that the value of those two pieces would not be so correlated to the value of the dollars, and they are essentially an insurance policy component against the devaluation of the dollar. If the dollar devalues, if we continue to see high levels of inflation, theoretically gold and Bitcoin would increase in value. Now, if I've got a home, and let's just say, a $500,000 home, I don't take $500,000 and stick it in the bank and then say I'm self-insured, I don't need insurance. Right? And the same thing with our portfolio when we talk about these components of Bitcoin and or gold is that you never want to put all of your money into it. You try to leverage those dollars and invest just amount to provide the protection for the asset that you are trying to protect against the loss of. So in other words, that Fidelity article kind of states between a 2 and a 5% portfolio allocation. I think that's probably in the neighborhood or the ballpark of what is appropriate between either Bitcoin and gold in some combination. I've seen that could potentially help to stabilize a portfolio and then leverage those dollars to help protect against the loss of value that are in the rest of the portfolio's dollars, if that makes sense.
Right. This was interesting to talk through. And of course, we will link to the white paper so people can read it on their own. But obviously, it's kind of high level here. If somebody has more specific questions, Peter, how can they get a hold of you?
Yeah, you're welcome to reach out. And we do have some clients that are interested in including Bitcoin or gold ETFs in their investment portfolio. And then we've got some clients that absolutely have no interest in that. I understand both sides. It's all unique and individual. And those are some of the things that we talk through as we help people review and analyze their current portfolio and make investment recommendations and selections for them. So give us a call, 919-300-5886, 919-300-5886. You can also go online. It looks like richonplanning.com. It's richonplanning.com.
All right, Peter, thank you.
Always a pleasure, Erin. Thank you. Hey everyone, Peter Richon here. Hope you enjoy the content. As always, make sure that you like, subscribe, share the videos with others that may find this information helpful. And as always, you're welcome to be in touch or to submit questions or comments. You can comment below the video anything that you'd like to see or hear shared on our YouTube channel and in future videos. If you got a topic that you've been thinking about or is of concern for you financially, be sure to let us know. We'd love to help you by discussing it on the channel. So appreciate the continued views and the likes and the subscribes, the shares, the comments, always helpful. We look forward to getting you the information that you need.
This has been Planning Matters Radio.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookzone Capital Management, a registered investment advisor.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.